Okay, I've opened up my MetaTrader, and what are we looking at here? The Aussie dollar daily chart. Um, let's use it. And here's our RSI. It's already open. Let's delete some of the lines that we're not going to need for today. We're not going to be discussing levels at all. We're just going to good. We'll leave in the trend lines as well. And let's go. What is the relative strength index? It is a technical momentum indicator. What it does is it compares the magnitude of recent gains to recent losses. This is an attempt to determine what is overbought and oversold. What that means is which commodities have been purchased so much. Overbought means what commodities or what forex or what equity pair has been purchased so much that they're overbought. There's too much money in them. Something's got to give. Something should be coming out. And oversold is the exact opposite. And that's what RSI helps us to do, to determine. The relative strength index is determining the true value of an oscillator. It depends on the understanding of overbought and oversold positions. There has always been a little confusion over the difference between relative strength index, which measures two separate and different entities by means of a ratio line, and the RSI, which indicates to the investor whether an issue's price action is created by those overbuying or overselling it. There is a formula that we use. I'm not going to get into that. What I want you to be able to do is look at a chart and understand what's going on. When the RSI moves with a conviction into the danger zone, say hitting 70 or plus on the scale, right in here on the scale. Okay, I'm gonna start over. The RSI on a scale of 0 to 100 indicates the overbought position is at 70. So as a position begins to hit higher, we look at the RSI here. Right now it is where is this right now? It's in the 50s, about 55.90, 55.96. As it continues to rise, as we're seeing it rising now, and goes towards 70, 70 indicates that a position is overbought. So as it hits 70 and goes above 70, that could indicate that this position is starting to become overbought, which means investors are pumping money into it. Something's got to give. Could indicate this could be a time when you want to sell. That's what over 70 means. Just the opposite happens as the RSI indicator starts to decline a little bit. Once it hits into a position at around 30, that indicates that the position is oversold. At 30 and below, say 40, 30, 28, 29, 27, and RSI down there could indicate that you might want to start thinking about buying the position. The RSI helps you not pull the trigger too fast. It's a good indicator to use, and it's a good indicator to know. So when an RSI starts to move up and goes into the 70 area, you might want to think about selling. Just opposite, if it starts going down into, say, the 30 indicator area, right around in here, you might want to start thinking about selling. That's how you use the RSI. Right now, just taking a look at this chart here, we're seeing, a bullish trend here. As we see in a bullish channel, the Aussie was appreciating from 95880 way back in mid-May, and then it continued to move up. When it hit about here, we see a decline. Now, I want to show you something. This decline that we start seeing right around in here, the RSI was at around 70. So we see that it could have been indicating an overbought position. and investors started selling out to cover some gains. Also, there was also a lot of news coming out of China during the time that we see a decline here. Slowing of their PMI, their manufacturing index, softening of their economy, and the lack of conviction by the Chinese government to soften the slow of the economy. So we see a decline. That coupled with an RSI hitting around 70, investors started selling off a little bit, and you see the decline. Now you see as it hit a low, right in here at around 101.17 with an RSI close to 30. That 30 area, right in there, what I told you, means that it's oversold. Now you're seeing people buying again. That is a way to use the RSI. That is a way to look at the trends, the trend lines, and so on. Then you look at the RSI, see where it's standing, and then you make a decision. And that's how it works. That takes care of today's lesson. RSIs. We're not going to have a video next week for personal reasons. I'm not going to be around. But in 2 weeks we'll pick up again, and we'll discuss some macroeconomic events and tie it into technical analysis. Then we'll continue moving ahead. RSIs, trend lines, moving averages, use them. The RSI is a good tool to use. Okay, have a wonderful week. The week starts tomorrow, Monday, and we'll have a nice little analysis to kick off the week. All right, have a great day. Oh, and as always, I want to hear comments, and I have a question for you guys. Looking at this RSI indicators here, tell me where during the months May, June, July, August, March, where the RSIs are hitting. Let me know where you think you should have bought or sold, depending on where it was in the 30 to 70 range. Let me know what you think. Give me some answers. Okay, great. Okay, guys, have a great day.